Okay, let's unpack this. We're diving deep today into something pretty interesting. These new digital currencies, stablecoins specifically, and how they might actually disrupt the big players, the established financial systems. So yeah, our mission for this deep dive is exploring stablecoins and what their rise could mean for a payments giant like Visa. We're pulling insights from an article, Visa's Resilience Against Stablecoin Disruption. And the goal really is to get you the key takeaways. Are these things a real threat? And, are there any surprises in the details?
And it's moving fast. What's fascinating here is the regulatory side is actually starting to take shape. Just this week, the U.S. Senate approved some key stablecoin legislation. It's called the GENIUS Act. That stands for Guidance for Ensuring New Investment Utility and Stability Act, for anyone who likes the full name.
Okay, GENIUS Act. So it passed the Senate.
Passed the Senate, yeah.
Yeah.
But it's important to remember, it still has to get through the House, the other side of Congress, and then land on the president's desk. So, it's not law just yet.
Right, still steps to go.
Exactly. But if it does become law, it sets out some pretty crucial rules, like stablecoin issuers. They'll need to hold enough reserves to actually repay customers. That's huge for trust and stability. And they'll have to face regular audits. So more transparency, more security around these digital currencies.
Okay, so legislation's moving, maybe adding legitimacy. How's the market reacting? Are investors seeing this potential for stablecoins to take off as like a threat to Visa? Is it hitting their stock?
Oh, yeah. The market's definitely watching. You see investors betting that this kind of law, if it goes all the way, could really push customers towards using stablecoins more. And the thinking goes, well, that could mean less volume, less profit for someone like Visa. We actually saw Visa's stock dip a bit, 0.70% this week, trading around, $338.01. So yeah, there's some concern there.
A dip, okay. But you mentioned the article's title suggests resilience. So why isn't this seen as maybe a bigger, more immediate danger to Visa's business right now?
Right. Despite that market reaction, it's really important to see why it's probably not a large threat to Visa's core business model, at least not today. The reasons are kind of layered, but it mostly comes down to scale, the incentives involved, and just the sheer existing infrastructure Visa has.
Okay, scale and infrastructure. But then why all the buzz? I mean, you hear reports, big names like Walmart, Amazon, looking into maybe creating their own stablecoins. What's the pull for them, for the merchants?
Yeah. Here's where it gets really interesting. The main reason for merchants is pretty straightforward, actually, and this raises an important question. It's those fees, the high fees they pay to credit card networks. Usually somewhere between 2% and 3% on every single transaction.
Wait, 2 to 3% on every sale? That sounds like a lot. Does Visa pocket all of that? I sort of assumed they did.
That's what surprises a lot of people. Visa itself, they typically collect a much, much smaller piece, maybe 0.1%, sometimes a little more. The vast majority, that 2-3%, that actually goes to the banks. The partners who issue the cards and fund all those rewards points and cash back that we tend to like.
Wow. Okay. So the fee isn't just Visa. It's funding my airline miles, basically.
Basically, yeah. It's funding the perks.
So if Walmart or Amazon could use their own stablecoin, get around those fees, what kind of money are they saving? Is it significant?
It's potentially huge. We're talking billions. If, and it's a big if, they could get mass adoption of their own stablecoins. Retailers like Walmart and Amazon could save billions of dollars a year that usually go into that whole interchange fee system. But again, that keyword is mass adoption. That's the tricky part.
Billions is a huge incentive, though. So what does this all mean for Visa defending its turf? You mentioned scale earlier. How big is Visa, really? What's the challenge for a stablecoin trying to match that?
Defeating Visa's network is, well, it's not easy. The scale is just immense. They operate in, 200 countries and territories, accepted by 150 million merchants, and that's still growing. Plus, there are 4.8 billion cards out there with the Visa logo, debit, credit, all of it. And the volume, they process over $15 trillion in total payments every year.
Yeah.
15 trillion. It's staggering.
Okay, those numbers are pretty mind-boggling. Hard to compete with that reach.
Exactly. And if we connect this to the bigger picture, stablecoins have this classic network effect problem. They need consumers to use them, right? But consumers won't really use them for everyday stuff unless they're accepted everywhere. And merchants, they won't bother accepting them if hardly anyone is actually using them. It's this chicken and egg thing. But on a global scale, Visa solved that decades ago.
Right. You need both sides to jump in at once. And then there's that other piece we touched on, the consumer side. The rewards. I mean, cash back, travel points. People really like those perks. I know I do.
That's a critical barrier for stablecoins. Those credit card perks exist because merchants pay those 2% to 3% fees. that money funds the rewards. So if stablecoins bypass those fees to save merchants money, well, they can't really offer those same juicy rewards to users, which means, a much worse customer value proposition compared to credit cards that literally pay you in points or cash to use them. That makes adoption really tough.
Okay, so putting it all together, the scale, the network effect, the rewards issue, it sounds like Visa has some serious defenses. So the big question for listeners holding the stock or thinking about it, should you sell your Visa stock based on the stablecoin news?
Look, based on this analysis, my advice would be no, probably not selling just because of this stablecoin buzz. Visa clearly has a very strong competitive advantage, that massive scale we talked about. Stablecoin issuers are, frankly, nowhere near matching that right now. And let's not forget that Genius Act, it's not even fully approved yet, so panicking seems premature.
Okay, so don't panic sell. But is it a screaming buy then?
Well, that's the other side of the coin. It doesn't automatically mean it's a home run buy either. Their earnings per share, the EPS, it grew 10% year over year last quarter. That's solid, respectable growth for a huge company like Visa. It fits their long-term picture. It suggests steady, durable growth, not necessarily the explosive hypergrowth some might be looking for.
Steady and durable. Okay. And what about the price? Is it chip after that little dip?
Not really. Even after dipping slightly, Visa's price-to-earnings ratio, the PE, is around 34. That's still quite high. So, yeah, the stock looks pretty expensive, objectively speaking.
Expensive, but with strong defenses.
Yep, got it.
So I've kind of laid out the core tension here. You've got this potential disruption brewing with stablecoins, driven by merchant desire to cut fees, versus Visa's incredibly strong network and the fact that consumers really like their credit card points.
Exactly. And maybe that leads to a final thought, something provocative for you to chew on. Given these really strong opposing forces, retailers desperate to cut fees, and consumers loving their rewards, how might this whole evolution play out? Could we see totally new kinds of financial products or services emerge? Things that aren't just, direct replacements for cards or stablecoins, but maybe novel solutions born directly out of this friction. What kind of innovative ideas could actually bridge that gap? Save merchants money and keep consumers happy with benefits? That's the really interesting question looking forward, I think. What haven't we even imagined yet?